What is up, everybody? Logan here again, joined by Halcyon, almost as always. And we're going to run over this Tesla Long Condor. And then we're also going to touch on the calendar that we closed yesterday on it, and then the new position we opened today. So I'm really excited to get back into this one, man. And I appreciate you coming back on.
No problem. I think when was this? Maybe a week ago, we mentioned that Tesla looked mighty sexy and was ready to go. It's been coiling and we've been hunting it for a while, and it's ready to pop off. So, technically speaking, for what I look at when we are waiting to have a move take off, I would say this is probably a 4 out of 5 starred setup for me. The only reason I don't have it as like a full 5 out of 5 is just because we were under the moving averages for a while here, and usually those cause some problems to just explode over, except when Tesla does this pre-market. So then it's not an issue, I guess. So here we are. We're looking at different ways to take advantage of this. And my personal opinion is we're going to see this going for a little while. That this isn't just going to be a 1 or 2 day thing and it's done. I think we're going to see Tesla try to go back and attack 700 here over the next week and a half, maybe 2 weeks. Mm-hmm. But when Tesla gets going, Tesla runs, man. It's why it's got so much attractiveness in the option side of things, and lots of people play on the stock side because when it goes, it goes. So real quick, this is so here's kind of just our quick initial setup here. I love the squeeze. I think this is one of the best indicators that's pertinent, that's on TOS, and I believe Tasty has it as well as TradeStation. It's a combination of Bollinger Bands and counter channels and a few other items going on, but ultimately it basically gives you an idea of when momentum's ready to explode and get going. So we've been having this nice buildup going over for a little, since early June. We've been basically stuck sideways with Tesla for, at least the better part of the month here, and really since almost May, like mid-May. This really hasn't gone anywhere. But we are finally starting to break out. We haven't even fired long yet on this, so we still don't even have the actual long signal. However, we were looking for this to, the momentum to us looked like it's going up, looked like it was going to be moving, and that's also in the multi-time frame. So this is my 2-year daily. If I look over at the 4-hour, the chart looks dang near exactly the same. Look over at the 195, and it is fired long. Let's zoom out a little bit here. So the 195 again looks super healthy. When you have multiple time frames stacking up with the squeeze, and I don't mean a short squeeze, but just stacking up with the squeeze indicator, all projecting going long, you need to pay attention and you need to act accordingly. So that's what we did. We took a look at taking a swing at this. Now, of course, let me go look back. What was this? Yeah, this would have been Monday, I believe. Let me find Monday. Yeah. So Monday, the 21st, we started to break out in the afternoon on Tesla. And so I called out doing a long calendar at 700 for Tesla, week and a half, or basically 2 weeks out. And then sure enough, I think quite literally the moment we put that on, it dropped from being over 630 down to 620s or around there. So it invalidated my technical breakout. So I said, all right, well, then we're going to close this and we'll reset it once it closes itself over the top of 630, which was the whole point of what we were doing. And sure enough, it does this pre-market this morning. Whatever. It's just how trading goes. The reality is, I do not think this is a 1 day or 2 day trade. I do believe we're going to see this pushing for a while. I think, again, minimum 700, probably more like the median here, which is 728, or the mean is 728. That seems like a reasonable place to see that Tesla tries to push to. And it's got, a good week or plus to go make that happen. So looking back to the daily on this, again, it just looks coiled, ready to explode. And again, I think there's a lot more than 4% to get out of this thing. So how do you take advantage of that? And what are you looking to do with this? So let's look at a few different plays. One we called out was a Long Condor, also well as the calendar, and just wanted to kind of talk through what a Long Condor is doing, especially for those with small accounts. This is a pretty interesting strategy for reducing cost, but still getting the ability to participate with upside. which is on small accounts. Tesla a lot of times is priced out. It's too expensive for smaller accounts to do regular options on it. For real small accounts, I mean, it's, if you want to go long call on that thing, it's so expensive. I think we were looking at Delta 70s and there was like $145 for a Delta 70, a couple months out. Like it's expensive. Most people, that's the entire account for some folks on the smaller account. So
Yeah.
That's not realistic to do that. But here are some interesting ways that we can work around that. And I want to just break down what those are. So one of my favorites, of course, is using a calendar. In fact, this is the exact one that order we sent in. It was trading at 220-ish, I think, when we initially talked.
I think 229 is where I filled.
229 then. Okay. Make it 229. I think 5 seconds after we put it on there, it was down to 220. And so this is what we initially looked at on Monday afternoon. All right, it was 229. Now, if we didn't do this with a calendar, which again, what we were doing was selling the 700, which is basically saying we're going to collect premium on that, because I don't think we're going to go past 700 within the week and a half here, and then go long the 700. And what happens is the long 700 is going to, ideally what happens is it increases in premium faster than what the short leg is doing, and thus you make the money on that. That's where you're reducing that. But it makes it so much cheaper to go that route. So if we, for example, to look at doing the long call by itself, the trade is going to cost $2.29 on a debit. That's the max you can lose, the $2.29, whatever you're paying for this debit. However, your max profit, if you land perfectly, which you're not going to do that, very, very, very unlikely you land right at 700 on, expiration. But if you did, you'd be looking at something about $1,500 win there for this is actually a one lot. So $229 to get 1,500. That's a pretty damn good risk reward. Now, the reality is we're so unlikely to get those regularly that really what we're looking for is, about 100% to 150% on that. And then you take the trade and walk away, unless it starts stalling at like a certain place, which is actually helpful. And it's because it's a theta positive trade. Currently, what it's trading at, and let's just analyze the opposite trade, is $4.07. So we are, that would have been a really nice win had we not closed it out the next morning when Tesla started falling back and not doing what you're expecting it to do. So again, the reasons for that, right? Something to learn about, and something certainly for us to look at managing trading long term is, for me personally, my technical reason I got into the position, because I was expecting it, was when it went over 630, I was expecting that to be the breakout point. And we pushed 630 in the afternoon on Monday, and we went above that. And I said, all right, I'm going to give Tesla the benefit of the doubt. We're going to close above 630, which means I'm just sneaking into this trade a little bit early, not waiting for the full confirmation of the close. And then, like I said, sure enough, it fell back to 620. And I said, all right, well, that's fine. You're only a commission away from getting back in. So we closed it out. I think we closed for like $2. It wasn't like we were taking some massive loss in the thing.
Yeah.
And then look to reload it, which I was planning on doing that today or tomorrow, with the understanding that we were going to see Tesla try to push that 630 again. Of course, it didn't do that, and that's okay. That's just what happens with trading. I know it, from a setup perspective, I would have done this 10 times out of 10 because that was the right thing for how I'm trading it. Anyway, so that's a calendar. It's one way to do that, reduce the cost down versus just buying a straight up long call. You obviously are controlling your risk a bit here by doing the selling of the 700 in the earlier, in the front month. Mm-hmm. So, but which then puts a cap on profit. But again, when we're growing small accounts, you're YOLOing every trade and going long naked calls on everything. It may work for a little bit in an environment that's a straight up environment, but for a new trader, that is a really fast way to start losing cash and get really frustrated with, option trading in general, because there's a lot of moving parts and pieces that sometimes you will say, what on earth is happening here? This makes no sense. Why I'm losing when the position is going the right way for me. So, and that's a whole different discussion. We can get into why that happens and all those things at another time. So that was one option here. And we like I said, we had it on, took it off, and wish we'd left it on, but that's what it is. Yep. Not perfect. So then instead we did a condor, right? A long condor, which is going to be a little different than what most people are used to doing. Most people are used to doing the iron condor, or they're more familiar with that because long condors are kind of like a forgotten trade. And so I want to just talk through like what exactly is a condor, and obviously it's the condor is they give it based on the shape of what the trade looks like, and condors have gigantic wings, and so that's why they show it called a condor. Iron condor, you're selling premium on both sides and hoping the profit, the position stays in the middle of the zone, where in this case, on a long condor, I'm actually anticipating price moving into my zone. And it's a debit trade, not a credit trade. Okay, so it's a debit, not a credit. So, but let's take apart what an actual long condor is versus what an iron condor is. So the first part is you have a vertical debit, right? Just a straight up normal vertical debit. That's what you're doing. Okay, you are expecting price to move up. If you didn't do the regular vertical debit here, you're just paying a lot more in your premium in terms of getting into that long call. And in this case, we did a long 665, and then to offset some of the cost, we are selling the 670, right? So our max loss in that trade, if you did this, was roughly about 2,000, and max gain, if on 10 again, is going to be about 3,000. So it's not quite, it's a little better than 1-for-1 risk, not too bad. However, from a small account perspective, if you're looking at managing growth in there and managing losses, because again, if you're not right, if you don't get past that 667 strike, you can be right on the price, but if you're wrong on the timing, you're going to lose this entire account, this entire amount of money here. So the first part of the condor is this is your long side of things, right? And the second part of the condor, a long condor, is you're actually selling. So this is a call debit. You're also actually selling a call credit against it, right? So here's what the long side looks like. Again, at expiration, if you're above basically 670, you're making your full 3,000, give or take a couple pennies here. However, the other side of the condor is going to be a call credit. In this case, it is 685, 690. And again, that is now at expiration. If as long as you're below 685, you are going to receive your credit that is available to that, which is at this point 620. We'll just lock that in. Now, if you mash these things together, this is how you get the condor, and you get that shape. So remember, you have the long side looks like this. The side you're selling looks like that, which is further out of the money. Your condor smashed together now looks like this, and it creates this profit window for you, which let's just highlight that. And there's kind of two interesting things that are going on as price keeps going this way, right? What you're going to see happening is you got a profit zone showing up here, right? This whole little profit area, as long as we can get in between this 675 and 685 range, which is not that big of a window. And I'm not even trying to land in there. I don't even really care if we get perfectly placed in there or not. What I want is just that price just keeps moving. Sorry, let's get let's get an arrow, not a square. I want prices to keep moving this direction, because what happens is that this keeps bumping up theta, or T+1 line here, and that's bringing in profit for us. All right, so you can be, so the interesting thing with this is a theta positive trade. And as it moves closer to the profit zone, you see the price of your condor explode up in value. So we did one on Airbnb last week, I believe. And that one, that was up 100% at one point. I think we closed it for a win of about 60%. And I would expect literally the exact same thing with Tesla on this one. I'm putting it a little further out in time just because of Tesla gets going, it gets going. And, again, I would expect in this case, we paid 58 cents for this, right? Because the call credit side of your condor is offsetting a bunch of the costs on the vertical debit side of it. Yep. All right. And then that way, again, from a small account perspective, it is going to reduce down your cost to get in. The interesting thing here too is now you've capped your losses. Right here is the worst you can lose is what your debit is, in this case 58 cents, and if you did 10 like I'm proposed here, was $580 is the worst you're going to do. And if at expiration we're anywhere in the middle of this 675 to 685 range, you're going to be looking at somewhere around 4,500 bucks for profit there. So 580 to 4,500.
Huge.
Okay. So not a bad, risk to reward. I realize I'm not really worrying about, can I get that perfect hit like that? I'm really looking, I can get about 100% on this. And for, again, a small account managing growth on that, that's pretty, that I think most people are gonna be pretty excited about getting 100% on that trade. So that's what we're looking at. And that's what a long condor is, right? So again, it's the other thing too is that it's all one set of options. So it's all calls. You're not mixing calls and puts on this.
Right.
And it's something you can do too on the put side. So if you have a good setup where you think it's going to be falling down, this is another way to play the put side on the lower end. Just change them to puts and bring the price below it, and you'll have the exact same shape. So that's one way. Like, there's two ways to just control some of the risk on there in terms of the cost side of it. Which again, that from somebody who's new trading, maybe looks a little bit complicated, but you're just doing is just bringing some of the cost out. You're making it a theta positive trade, so you're not paying to see what your trade's going to do day in and day out. So again, if it just stays put here at 655 tomorrow, you didn't pay to have your option not move, right? Which is an annoying process when you're doing trading with options. You're paying to watch it not do anything.
Absolutely.
Again, I'm bullish on Tesla. I do not think even remotely close that we are done with this move. And again, I'll be doing some different things like put credit spreads on this. I've looked at maybe doing a leap, but it's, like I said, it's really expensive to buy it. So
premium selling against it though.
Whew. Oh yeah, you would make crazy premium on this because you can get, you can get. I mean, just it's ridiculous. Everything is pumped up with Tesla. It's just how they always are for the most part. So yeah, man, that's the play. It expires next Friday. I think we're going to probably blow through this by the next Friday in terms of price. So I'll look at adding another one on that's further out in price, probably over the 680 to 700 range or 690, 700 range, based on what we're seeing now. But again, we'll watch how the close goes, see the last hour and see what kind of, if we maintain the buying pressure. And if we do, I think we'll see it push through tomorrow and have another solid day. Which I'm definitely planning on doing some put credit spreads at the end of the day on it, and we'll see how it all works itself out. So there you go.
Cool. Well, I appreciate you coming back on, man. I think this will clear up a lot of the questions we were getting today in the Discord, and also just, overall with a trade, like you said, that looks complicated, but it's really not super risk defined, which is what I really like about it. And yeah, I'm pumped, man. So thanks again for coming on for this one.
You got it. Let's go make money.
Cool. Let's do it. All right, guys. I appreciate you guys hanging out as well. If you guys could leave a like, comment, and subscribe on this video, I'd really appreciate that. And we will see you guys in the next one.